Hey there, welcome to the video. I'm Scott Welsh, and we have some excitement for you today. We're going to talk about a trading system and crazy money management, and it's just going to be a blast. Three things we're going to talk about today. This is a methodology which, I kid you not, is the most money I've ever made in trading, period. So, this is something that's actually happened. Let me reiterate that about 400 more times. So we'll talk about that. We're going to give all the details, and we're going to talk about why it's very good and why it's very bad. Now, please, if you've never listened before, listen now. Do not risk money you cannot afford to lose. These are hypothetical numbers, but it also is something that I've lived in real life. There are real benefits and real dangers to what we're going to discuss. Please keep that in mind. Okay, as I mentioned, this is the most money I've ever made in trading. How much is that? Well, I'm not rich like you are, and it was about $50,000. For us at the time in the trading account that we were trading in 3 months work, that was pretty good. It was pretty substantial. That also included a $10,000 series of trades in 1 week in May of 2010, which I've talked about quite a bit. It was the scariest week of my life. But anyway, that's true. I have real trading documents that you can see. It's all true. So if you ever want to see it, I'm happy to show it to you. But it's painful because that was a scary week. Now, that all being said, I do not trade this way anymore, and that seems weird. It's the most money I've ever made, and yet I don't do it anymore. Huh, something fishy about that. Why? What is the reason? If it's so lucrative, why don't I do it? Well, let me tell you. Holy Grail fans will know what I'm talking about. Here's the methodology, okay? Here's what I did. We did talk about it a little bit last week in the newsletter, so I'll review it quickly once again. First, you wait for price extremes. You wait for something to get way far away from fair value. And then not only does it get far away from what you think is fair, but you wait for it to have been in a trend, meaning it hasn't come back to equilibrium for quite a while. For example, if your equilibrium fair value is a moving average, price always ends up touching the moving average. Always. They're based on the same math. Prices and moving averages will always meet at some point. And if it hasn't met, if these two have diverged for a long time, then it's due mathematically. So I would wait for price not to have touched a simple moving average, which is my proxy for fair value, for a long time, 500 bars. Right? On a daily chart, there might be 200 bars, and so on. Okay? Wait for an extreme and wait for it to not have gotten back to equilibrium for quite some time. Once you get into that situation, go for big money, small pips or small ticks, but big money. So, for example, we would go for $1,000 around, or even higher, up to $2,000. And we're talking about a bigger account now. We're not talking about $1,000 account. We're talking about a $50,000 to $100,000 account. You would go for those numbers. If you have a $5,000 account, divide by 10. Get it? We would enter at least multiple times, and at least 4. But we've entered more, okay? Especially in the scary week. We're going to talk about 4, but have 4 in the back of your mind. I'm going to show you actual numbers for entering 4 times. But this is not a one and done. You get in, and if it falls away, you get in again. That's how we did it, with the idea that we would never lose. As we keep entering, we're not going to get out till we get into profit. There are no stop losses. Why? Because we've waited for it to be extreme. We don't need a stop loss. We don't need no stinking stop losses because we're already at extreme. Price can't get more extreme, right? Using this methodology, I'm here to tell you, not hypothetical, it was extremely profitable for us. Okay? It was. Bottom line. For a short period of time. Remember when I made this money? 3 months-ish. Okay, are we clear? All right, let's move on. I went to the wrong way. Let's move on. Here now is an actual system that I built. This is a robot that I built that mimicked what we did. It's not exactly what we did. My training partner Jill and I, if you wonder why I say we, it's not my imaginary friend, we would do it completely discretionarily. It was by the seat of our pants. Not the best way to go. This is an actual system, okay? This is something that actually exists on my trading screen. There's a little bit different, right? A few small differences, but the biggest difference is there's no waiting. We're not waiting for price to be away from the moving average for a certain amount of time. We're just waiting for an extreme. We're waiting for how far away is it. That's it. Here are the details. 5-minute chart. Why? Because we won a lot of trades. It's on the euro dollar. Can you use a different currency pair? Yes, I use the euro dollar. Why? Because it's the best trading pair to use if you're thinking about Forex, and we've talked about that a few weeks ago. We only went long. Why? That doesn't make sense. The testing is better. Do your own testing. Going short in the euro dollar is dangerous. Not good. Okay. We used Bollinger Bands, trademark. I think John Bollinger doesn't like anyone else to say Bollinger Bands without saying trademark. As well he should. It's named after him. Bollinger Band was set to 800, so we're waiting for something to be very volatile and have gone far away from fair value. Fair value being the middle of the band, the 800 period simple moving average. And we move the Bollinger Band to 3 standard deviations. Normally it's 2. We moved it to 3, and that's what this system uses. 800 length, 3 standard deviations. Well, how do we get in? I'll tell you. It has to close below the Bollinger Bands. It's extreme. And then close back inside the bands. It's over, and it's ready to go back to fair value. Easy. Makes sense, right? Want it to show that it's extreme outside the standard deviation, especially set to 3. And then once it closes back inside the bands, clearly the move is over and it's going back to fair value. That makes sense. All right, what's the trade size? Here's the complicated trade size. Are you ready? 2 lots on the first trade. So we're using a $100,000 account. Let's say, divide by whatever you need to divide by. $100,000 account. First position is 2 lots. If it goes our way and it makes $2,000, or I'm sorry, $4,000. Sorry. 2 lots. If that first trade made $4,000, great, done. No other trades. If price went against us and it set up again, closed outside the bands, it came back in, then we would bet 6 lots per position. And if it went down and did it again, we do 6 more lots. And if we did down, it went down again, it went 4 lots. Okay, this is just hypothetical testing now. We're in hypothetical testing mode, not what I actually did. Although we had more margin back then and we used big trade sizes in real life. And we didn't take trades before 6 a.m. Eastern. Why? Because we weren't physically able to be awake. That was our cutoff. We'd get up at 6 and be at our computers, but anything before it was just too much for us. So anything after 6 a.m. Eastern time, we were able to take, and that's what the system also does. No trades before 6 a.m. There it is. 5-minute chart, 803, close below and above, 2664, $4,000 profit target, no stop loss, and nothing before 6 a.m. Let's take a look at a trade. Now, I had to condense it. Apologize for that, but here is a trade example. This is the lower band. This is the middle, fair value. And there's the upper band, which we did not use for the system. Price went down and closed below, came back in, first position. No, did not go to fair value. Closed below, second position. Closed below again, came back up third position, and came back and did it one more time. 1, 2, 3, 4. 4 is the max. We're in all these positions and it went against us. Then it's gradually, and then as it moved back to our fair value indicator right here, this is what's fair. As it got almost back to exactly the fair value, all of the trades were taken out for $4,000 of profit. Okay, and this is a trade example from recent times. This is from 2019, but all the trades look very similar. Got it? That's it. No stop losses, no nothing. You enter this way, you've got the trade sizes, and you wait for it. Sometimes it'll take longer, sometimes it'll go past fair value, but we just wait and wait and wait. No further trading. Okay? Make sense? All right. What does that sort of trading produce? Well, I went back to right before the financial meltdown of 2008. Just to give you an example of what it can do, and I stopped there on purpose. Here, using all those methodologies, and sorry if you can't see it, MT4, it made $195,000, 738. So $195,000 of profit. The maximum drawdown was 46,000. So if that happened right away on a $100,000 account, that's a big drawdown. But actually, we made a bunch of profit before this happened, so it was only a 20% drawdown. So we doubled our account, pretty much, with only a 20% drawdown. People would kill for that. Look at the winning percentage, it's good, and they're 99% quality, so it's a good test. Okay. Now, oh, take a look at the equity curve for that time period. It's a little less than 2 years. Keep in mind, straight up. La 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 la. Does it beat? Can anything beat that? The answer is no. That is perfect. Oh, brings back good memories. All right. The test had an 88% win rate, but keep in mind that means 100%. It did not lose a series of trades. Of the 4 trades, maybe 2 of them were negative, but the bottom 2 or the last 2 were positive. So overall, we made money every time we started trading. Not every single trade was profitable, but you understand every series was. Okay? No losing series. Every time you got started, you made money. And that produced a perfect equity curve. Yay! And it doubled our hypothetical money. This is hypothetical. Hypothetical. It doubled our money in just about 2 years. Almost exactly, but not quite. Okay? I told you it was profitable. Oh, here's a fun thought experiment. What if we hypothetically started in the fall of 2008 in your July, August, September range? Methodology is exactly the same. Everything's the same. And here's what happened. This only went from fall 2008 to early 2009. We got into a series of trades and they never got to profit. When the trade test closed right near the end of 2018, this didn't go a long time, it's only a handful of months. The total net profit was minus 83,000. The drawdown was 89,000. In short, we lost our entire account in a matter of months by doing it. That's not good. Okay. Now, before we get to this recent times, I just want to kind of frame that in one regard, in one market condition, doubled our money, never lost a series of trades. In another situation, the meltdown, we lost it all in a matter of months. How do you feel about that? Do you feel like, hey, financial meltdowns don't come along all the time. We'll just plan on not having one and we'll double our account. I say that because I've thought this, okay? I've had long conversations with myself and with Jill about, why do we need to worry about 2008? That'll never happen again, right? But those conversations usually end in shut up. But anyway, so let's move ahead. Let's move to recent times. Let's not talk about the financial meltdown. Let's say we started in 2017 and traded it for about a year. It's about 12 months, almost exactly. Okay. Oh, look, it worked again. Maybe that was smart. Maybe there's no reason to worry about 2008. It's not going to happen again. Made about $72,000 in about a year, right? A little over 72. Drawdown, pretty calm. 25,000. 22% when it happened. Win percentage back up to 88, 89%, which means 100%. Okay, what do you think? Highly profitable once again. We never lose a series of trades. Okay, maybe we should be trading this. Maybe stopping trading this was a mistake. Well, guess what happens next? Trading beyond May 2008, once again, lost the entire account. The drawdown went all the way to 0. So we did it back in the financial crisis and it lost it all? Maybe. And we did it in recent times, 2007, 2008, 2017, 2018, and guess what? A certain market condition lost it all again with those parameters and those trade sizes. So where are we at? Well, for short periods of time, for us in real life 3 months, or for testing periods, a year to 2 years, nothing makes more money more quickly, at least that I've seen. That doesn't compound. Remember, there's no compounding here. I've seen compounded systems go this fast, but nothing as fast as this if you don't compound. It's the most. I've been testing this since what? We're going on almost a decade. 2010 is when we traded it live. I started testing it before 2010 manually and then with robots later. So we're going on 10 years-ish. I haven't seen anything go faster than this sort of methodology, okay? But why don't we trade it? Because I have yet to find an extended period over a couple years where you don't lose the whole account. It's true. That's why we stopped. I kept researching. I'd go back in time, would have lost our account. So I switched currency pairs, did another pair, that would have lost the account. You know how many hours I spent on this? Oh my goodness. Every currency pair had a moment where at this trade size level, that's the key, there was always a chance you could lose the whole account. And that's why every click of the button could have lost everything. That's where we're at, and we just could not continue, even though we made all that money. It's the bottom line. This is the type of system that I've actually traded, real life, real results, and I have reaped the benefits. And we didn't lose our whole account. We stopped before anything bad happened, and we still have that money today in our trading accounts, right? Thank you for that trading method. But I was lucky, right? Do you feel that way? There are periods of time where you would have lost it all. This type of trading, no stop losses at this trading level, this trading size, it appears to be doomed. And why do I say that? Because I can't find an extended period of time where you don't lose everything. But are there solutions? Well, you probably already thought of it. Use a smaller trade size. This doesn't lose everything if you trade it at 1/10 the size, right? So there are ways to trade this without losing it all. But you see where we're going? You would also not make anywhere near the same amount of money. Or you could just use a stop loss. You won't lose your whole account if you just stop out. But if you stop out, guess what happens to our profit? Down the tubes. It's not this outrageous 50% in a few months or 100% in a year or two. Then it just becomes a normal system, trying to get that 8 to 16% per year, 6 to 20% per year, something in that range, depending, right? Then we're taking this system that's extraordinary, at least in short periods. It's just a normal system with a stop loss. Win percentage goes way down, 50, 60%, blah, blah, blah. Okay. And if we're going to trade this way with stop losses, I'm telling you, I've seen better. I trade systems that are better than this. I can't make this system with a stop loss match up to things I already have. Okay. There are ways around losing your whole account. Yes. Stop small trade sizes. But once you do that, let me say it again, all of the allure goes away. The big money goes down. And there may be better ways. All right. So there's two ways to think about this. Say you've got money to lose and you want to go in and try to double your account real quick and get out. Just like Vegas. I'm going to get in, I'm going to bet it on roulette, and I'm going to double my money. I'm going to stop. I mean, you can try that. Seems extremely risky, and I'm not willing to do that. I'm not willing to recommend doing that. But it's out there. I mean, I showed it to you. It makes money fast if you want to go for it and risk everything. Or you can water it down and have something a little bit more long term, right? Or you could do something crazy like closing your trades, right? Often just keep closing your trades, not even a stop loss, but close your trades often. That'll keep you out of those drawdowns. But again, once you do these solutions, right, you lose all the profit allure. All right, that's all for this week. I wanted to share that. That's some real life stories with a real life system that I coded up. So hopefully it's useful to you. All right, there's latest updates. You can get the robots. It's ScottWelshStrategies.com and join the newsletter at the same place. Just go to the contact button. All right, that's all for this week. We'll be back next week with more stuff. Talk to you soon. Bye for now.